Thank you very much, Melissa. We are at the Global Retailing Conference in Tucson, Arizona with Doug McMillon, CEO of Walmart. Doug, thanks so much for being here. This is the Global Retailing Conference. A lot's going on in the world. Walmart touches a lot of it. The president's talking about closing the border with Mexico. How important is an open border with Mexico and, frankly, a trade deal with China to Walmart's business?
Yeah, we certainly hope these things get resolved or don't happen. In the case of Mexico, the flow of fresh food in particular comes to mind, and in-stock levels. So it's really important. I heard Jimmy Fallon joking this week about avocado out of stocks, and we don't want to see any of that happening. Everybody needs their guacamole. And China seems to be headed the right direction based on the news this week, but as you know, it's been pretty volatile.
And speaking of food, Amazon is getting aggressive with its Whole Food stores, lowering prices, potentially opening a new supermarket chain. Can Walmart continue to win the price war in grocery? It's 56% of your sales. It's a very important part of your business.
Yeah, grocery is really important to us, but price competition's not new to us. And I think, what we've been doing these last few years to drive our productivity loop, to make sure we're managing our expenses, increase our units per labor hour, that kind of focus helps us be able to continue to lower prices as we have been these last few years.
And what about the health of the U.S. consumer? In December, when you joined us, you said the consumer's in pretty good shape, but we hear the concerns that get discussed on CNBC every day, things like slowing global growth or potential worries about economic data points. What are you seeing?
Net, I think the customer's still in pretty much the same place they were in the fourth quarter. During the first quarter, you experienced the flow of tax rebate checks, a different Easter timing, and other things as a retailer that create some volatility in the numbers. So we won't release the first quarter for a while now, but generally speaking, the customer's in good shape.
When it comes to sales growth, Walmart had for the U.S. comps last year the best year in a decade. This year, you're looking for more growth, but at a slower rate than what you saw last year. What's going to be the key sales driver and frankly, the biggest risk to that growth? Is it the U.S. economy?
I think in the case of stores, the job that the team has done to improve our store experience and reduce prices has created customer traffic and some really positive momentum there. And the team just continues to execute. I got into a store here this morning and just so encouraged by how our teams are feeling and the work they're doing in stores. And then on the e-commerce side, we were pleased to grow with the 40% target that we had last year, had a stronger fourth quarter at 43. And as we forecasted this year, that number is coming down some, but it'll still be a high rate of growth, and that's great to see. The magic for us is in how we bring the two together. And I was just speaking with this group that's here, including a bunch of University of Arizona students, which were fun to talk with about digital transformation and the change that we're going through in the way that we work and how we put our assets to work, which really results in an omni-channel experience that's seamless for customers. And I think that's our advantage. So that's what we're working on. And as long as we continue to execute against our plan, I think you'll continue to see strong growth from all parts of our business.
And speaking of digital, obviously a very important part of the growth, but still a small part of the overall sales. And you've talked about how online sales doubled in the last 2 years, or nearly so. So you've gained some share, but it comes at a cost. Losses are going to be higher this year for digital than they were last year. How do you change that, and when could that possibly happen?
Well, you saw our fourth quarter results. I think there's some things underneath those numbers that are encouraging. And one of the great things about Walmart is we've got all these levers that we can pull in multiple countries and multiple businesses. And to build an e-commerce business takes some time, and it does take some investment. But we're committed to that, making progress against that plan. And store productivity is continuing to improve. And some of the things we're doing with automation in store and the way our folks are learning how to work in different ways causes me to believe that we can make all these pieces come together and work.
And speaking of bringing pieces together, grocery is very important. We've touched on that already. You're making strides when it comes to delivery. You're continuing to add the locations for the pickup. But you've also said that your most profitable customer is the one that comes to the store, does the work themselves in the store. So what's the balance there by offering that to shoppers, but not losing that profitable shopper to these new services?
Well, when a customer comes to the store and shops, transactionally that's true, but it's also true that the overall relationship is what really matters. And as we've shared before in analyst conferences and other places, customers who shop us both in-store and online do twice as much business with us, and they do more business in stores. So we're not going to get hung up over which way you want to shop today. If you want delivery, we're going to get that for you. If you want to pick it up, we can do that too. And if you want to come shop in a store, we're going to have the best supercenters that you can choose to shop in. So I think that's the way to think about it, is the holistic relationship, not just a piece of it.
inside in your presentation, you were talking about change, and you've been now Walmart's CEO for more than 5 years. The company looks a lot different now than it did in January of 2014 before you started. But your stock price is up only about 30%. S&P 500 is up about 60% in that time. Do you think investors have not really appreciated the transformation that Walmart has gone through? Is it appropriately valuing what you've done?
Well, that's for somebody else to decide. I would say, probably partially, but it's a fair world and our results speak for themselves. So our point of view is if you make us choose between long-term and short-term, we're going to pick long-term. Both matter. The quarters matter to us, but we're trying to position the company for another generation, and we're trying to be good stewards as we do that, manage our costs, manage our capital, deliver an appropriate return during that transformation period. But no doubt, we're making a bet on change. We're going to build this e-commerce business. We're going to make the most of the food opportunity that we have, but we're going to build a non-food e-commerce business too, and we're going to put them all together, and that will take some investment. I'm pleased with the investment choices we've made in our people. We've raised wages, we've invested in training, our retention's getting better. Wages are going to continue to go up, and they're continuing to go up within Walmart, a market at a time, and that's the way that we'll approach that. But we'll also invest in these training academies. We've got 200 of them now. We'll invest in equipment, as we have been, that our associates can use in store. So there's a people investment, there's a technology investment, there's an e-commerce investment, but we have to make some other good choices, as I believe that we are, to drive productivity so that that gets funded by ourselves to the greatest extent possible, and that's what we're trying to do.
So it sounds like you don't see it necessary to do another big wage increase, that you're doing it market by market or store by store as is necessary.
Right now, that's our approach.
Okay.
That could change in the future. What we must do is together with everything. And starting wages are important, but they're not the whole story. Our average now is over $17.50, and we have a nice quarterly bonus program. We have great health care offers. We have changed our leave policy. Birth mom can now get up to 16 weeks paid leave. It's not just starting wage, it's the whole thing. And when you get the balance right in the whole system that you have, retention will go up. And that's important to us strategically because we want our associates to be with us longer so they can pick up these new skill sets as tasks change and automation takes hold in certain jobs. I was in this store this morning talking with an associate whose job had been eliminated and a new one had been created. And her name was Grace Marie. And Grace Marie said, I've been with the company 28 years and this change is hard. But these new skills that I'm picking up, I'm committed to. And the one thing I've learned from Walmart is that we're family, and if you embrace change, everything's going to be okay. That's the kind of person we're looking for, and to have them stay with us, there's a balance of investments, not just the starting wage rate.
I want to clarify something quickly there. You said the average rate was $17.50. That's with pay and benefits, or that's the average rate, just pay?
That's pay with cash bonus, but not with health care.
Okay. And you talked a little bit about the change with Grace Marie and changing jobs. How do you see the current job market? You employ 1.2 million people around the world, the largest private employer. Will Walmart always need that many associates with all the technology you're putting into the stores?
That's a great question, and I don't know for sure what this will look like over a longer time period. But so far what's happening is new jobs are being created, like the personal shoppers we're using for grocery pick, as other jobs are being changed or in some cases eliminated. So I wouldn't rule out still needing, a really large number of people, but I do stress that for us, retention and training are part of our strategy. So, if we can handle the rest of this through attrition because we're just not hiring as many new people, we'd rather do that than to lose the people that have been with us for a longer period of time.
And just again, as we wrap up, we talked about it earlier, it was wrapped into several questions, but the health of the U.S. consumer, now going through the end of the year, how do you see it?
I don't know that I can call the whole year. I think, as I mentioned before, the consumer is in pretty good shape, and net of all the pluses and minuses that happen traditionally in Q1, including weather, I think the customer is in about the same shape they were in Q4.
Sounds wonderful. Doug McMillon, CEO of Walmart.
Courtney.
We appreciate your time here with us today.